What's going on, everybody? It's David Piatek and Lourdes Fernando with VA Housing Education. And man, what is happening in the market right now? It's kind of crazy. The Fed has announced that they're going to be dropping the rates a couple times. So markets have adjusted to it already. So today we're going to be talking about those 230,571 veterans. They can save. Yeah. And you wonder where I got that information. So the VA actually publishes every month how many VA home loans have been done, right? So that's from October until June of this year, which I'll kind of explain why I picked those numbers or those dates. But it basically accumulates to about $82 billion in loans. I do this every day, just like you, Lourdes, and I didn't realize how many VA home loans are done on a monthly basis. There are over 25,000 veterans either buying or refinancing, doing cash outs. And like we've said before, it's the best worst time to buy. When rates are high, you can get in, especially in the wintertime. You can actually get into properties or people that bought last year. And as rates drop like they are right now, it makes it like we're back to being a competitive market. Like we're already seeing multiple offers again on properties where it's like it's December. Like, how is this happening? But still, I think it's still the best time to purchase a property. We're going to go over some examples of where the rates are right now. And we're going to talk about how the interest rate reduction refinance loan works throughout this whole presentation. But there's going to be a segment that I spent a lot of time talking about the qualification, the requirements of it. We're going to do some follow-up videos as well tomorrow night, and Friday, just kind of talking about what's going on. Because some people are like, is it going to drop to 2.25? Lourdes, what do you think?
No.
Yeah. No. Yeah. Yeah, I don't think so either. But like it's kind of tough when the Fed announces that, we're going to do 3 rate cuts, and markets overreact sometimes, and they can correct quickly, right? So, there is a time frame that you should be really considering refinancing with the interest rate reduction refinance loan or whatever the case may be. So that's just kind of a little bit about that. Again, we're going to go through some examples and case studies that we're doing right now in real life. But Lourdes, tell us, where do you see right now the market overall across the country? What's going on with it for veterans that kind of like missed out on buying places, but are still thinking like, is it possible? And when is the best time to buy, or the worst time actually to buy?
Well, the best time to buy is when you're ready, financially, mentally, the whole nine. But there are some factors that come into that. And we are seeing, with the Feds announcing that they are going to cut the rates, we are seeing that already. The rates go down almost a point. So what does that mean is people are, that's big time with if it's a higher price point or even any price point, it's a big difference, a full percent. So we are seeing that. And I was trying to see if I can get some national data, but I'm only able to pull back into October. And even in October, we were seeing that there was a significant, a negative 4.1% of existing home sales fell through. Wow. Compared to the year prior, where it was a really nice market, crazy market, in the Northeast, Southeast, but the West, the Northeast, South, and then the West Coast, but Midwest has kind of stayed the same. So it really hasn't seen a big fluctuation compared to the rest of the United States. And we did see that we did have a 1.5% pending home sales. It did fall through. So that means that there's a little bit of inventory out there, but we're not getting them under contract. And that's a big reflection. There's a lot of factors that come with that. We do see that the interest rates were really high. And I know just almost a month ago, we were looking close to, 8%, David? It was pretty high.
Yeah, it was crazy. Yeah, but again, the people that bought, they get a reward, like we've been saying, because it's a cyclical market, just like real estate, right? It'll be hot and cold, and it really right now was driven with the interest rates But yeah, but I'll let you finish.
Yeah, no, I think we're good with that, and that's probably going to go into how it's really affecting the housing market. There's a ton of statistics, but those are pretty much the two that we want to know: how long are they staying on market, and also if there's even any inventory on the market. So we can see that there's not that much. There's less inventory out there, and then there's also the less time on, or they're sitting a little bit longer than normal, which is great because you can, if you're a buyer in this situation, you can actually get closing costs paid for. You can get certain things like that, but you have to be very careful now. These interest rates are dropping. That is going to significantly impact the amount of activity on properties. I'm already starting to see a lot of my buyers are coming back right now. Like, let's go, let's go, let's go, and lock it in. And we are starting to see multiple offers. We are starting to see shorter times with that. So yeah. So David, how does the rates affect the housing market in your opinion when it comes to the lending side?
So, I mean, just to your point, right? We just had a lot of people reach out to us in the last week, just like, hey, I'm back in the market to purchase. But just imagine that being multiplied across the country, right? That's why we've been saying, like, when rates are high is the time to buy. Because what is this saying, Lourdes? It's you marry the house, but you date the rate, right?
Mhm.
So you can always refinance the interest rate. The challenge is most people want the housing market to crash and interest rates to go low so they can, that's what a lot of people are waiting for. But as we know, it just kind of been balancing out. We're not going to have what happened in 2008, 2009. People qualify for mortgages and they're buying with that. So
Yeah.
I think also it is the right time to purchase. But how does it work for sellers, right? There's challenges where they might have even lower rates where today's market is. What do you think of that? Is that an option? Like, what are you seeing out there?
Yeah, so right now it's like I said, we are starting to get more activity compared to we're starting to see more buyers at the market. So we still don't have much inventory. There's certain areas, and I know the Midwest, it's cold out here. So
It's
people
not
always
snowing
say,
yet.
huh?
Not snowing.
It's not snowing, but it's pretty cold out there.
Yeah,
And people they figure, if they close now, the January, February timeframes where it's blizzards and it is snowing, it is going to be a very hard time to move during those times. I know I moved in a
literally.
blizzard and it was just not the best move for me. But we had to do what we had to do. So yeah, so I mean, it just brings it back. Like, right now we are seeing the lower interest rates coming in, and we are still able to get, good deals on the buy side, but it's gonna start to change very quickly. And I'm starting to see that now. It is gonna change very, very quickly. So I know like the multi units in our area in the Midwest, the Chicagoland area specifically, they have not let off. Like they are just increasing and increasing in value. So we're waiting for that to take a little bit of a dip, but no,
Right.
not really. Those are still multiple offers. They haven't let off multiple offers. So and those go very quickly. Any type of deals are swept off immediately.
Yeah.
So that's what I'm seeing on my end. Condos, we are seeing the condos as normal in this time of year. They do take a little bit longer um, compared to single family homes.
Oh, for sure. And the quick reminder for all the veterans out there, if you were forced to buy a condo with a conventional loan, you can refinance into a VA loan and any condo could be approved. We have videos on that. So kind of make sure you check that out. So now let's go into what the interest rate reduction refinance loan is, how it works. Because if you own a home, I'm sure you're getting mailers. There's pigeons being sent to your house with information about it. But there's so many different components to the interest rate reduction refinance loan. Again, very, very popular in 2020, 21, even 22. So what the interest rate reduction refinance loan is that if you currently have a VA home loan, Now, there's a couple things with this. It can be a primary residence, a second home, or an investment property. You can get an interest rate reduction loan on all three of those with pretty much the same interest rate, which is insane, right? So people are thinking like, well, how do you have an investment VA home loan? Well, the thing is that when you buy a home with the VA loan, it's your primary residence, or it's designed to be your primary residence. And then you move out of it, use another VA loan, because you can have multiple VA home loans. If you didn't know, now you know. And so you use the VA loan again, and then that old property turns into an investment property, right? So let's say if this is probably very relevant for active duty folks that might have PCS during that time, whatever life events happen. So now you can refinance that property with the interest rate reduction refinance loan. I'll just call it IRRRL for short. Otherwise, like most of this video is going to be me saying that word. That just takes up so much space. So those are just the kind of things to consider, because even if it's a second home, you can still be able to use that IRRRL program for that. But what a lot of people really have questions about with that program is it like buying a house again, where I have to go through the entire process with my paperwork, pay stubs, bank statements. I need to get an appraisal, a home inspection, a termite inspection. There's so much that goes into buying a property. And the thing is that you can't roll any of the closing costs in on a purchase. You have to come out of pocket or get a seller credit, increase the value, right? There's those components that come with home ownership in that standpoint. Right. So with the VA, with the IRRRL, you can actually roll in some of your closing costs, actually all your closing costs, into the actual mortgage itself, which kind of leads us to a couple of things, right? When you think about the closing costs on a interest rate on an IRRRL, they vary widely, and it's based on where you live and the lender that you're working with. I'll tell you this, that if you try to work with the big banks, the ones that market to you all the time, that spend all that money on marketing and advertising, guess who's paying for that? You are. They're charging crazy fees, higher interest rates. And then, the one thing that I hear all the time is that, oh, it's a free loan. My lender will refinance me for free. Lourdes, is there anything free in life?
Nothing's for free.
Nothing's for free. So, and what they mean by that is they will roll the closing costs into the loan, so you don't have any out-of-pocket expenses, which again, it's just kind of, they take money here and hide it there. So if you're in that process, you could definitely reach out to us. I dropped my link in the description below, so you can schedule an appointment with us or submit an application. I mean, I'll kind of go over what those requirements are and the timeframes of that. But typically, if you have a title company, we can use their title company. If you're doing it in Illinois, on average, it's about like $1,000 to refinance. But I'll use Tampa, Florida as an example, because in Florida, it's warmer than here. That's a fact. The other thing is, I was just talking to a buddy over in Florida, and they're always making fun of me on how cold it is here, which I understand, in the Midwest. But the thing with that is, in Florida, you actually have to pay transfer taxes on a refinance, right? So a $300,000 deal would have an additional $6,000, let's say, in closing costs, versus Illinois, where you don't have that. The other thing that is a misconception is that you skip payments. Again, nothing is free. You are going to, a couple things are going to happen. One, you're going to reset your mortgage for another 30 years, which is not necessarily bad, because you just opened that mortgage up. If you've had it for a long time and you're refinancing, that can cause its own separate issue. But it's more of a case-by-case basis, and really looking at someone's financial picture to determine if it makes sense or not. The other thing to that is that the VA has placed different how to say it, like restrictions for veterans to refinance. They don't want veterans to get have equity stripped, meaning that a lender just keeps refinancing them, increasing their fees. A lot of the big veteran friendly banks were doing that for a while. Then the VA came down and slapped them with penalties. They paid the fees because they made a ton of money. So basically, in order for you to do an IRRRL, you must have made at minimum 6 mortgage payments, and it has been at least 210 days since your first mortgage payment. So a lot of people, that's why I chose June, because in June you're going to be qualifying here in February, and you would start that process now. Somebody dropped in the comment section about a link. I will drop that in a little bit, but it should be in the description. But I'll drop it on here here shortly. So we have the interest rate must drop 0.5%. We have the 210 days from your first mortgage payment. We have the 6 months. The other thing the VA did, which I was like, that's actually smart to do, is they put in what's called a recoupment period. So basically, let's say, Lord, and we saw this a lot, Lourdes, back in the day, is that clients would come and they would want to refinance and save $30 a month, but get charged $6,000 in fees. That makes no sense, right? So now the VA has placed that a 36-month like recoupment period. So basically, like, let's say you have a $500,000 home and you're going to save 1% on the interest rate. You're going to save about $500 $500 a month on that, just kind of depending on where your rate is. So if closing costs are $1,000, it makes sense to do it. But if you're saving $100 a month and you're spending $6,000, I'll tell you, it just wouldn't be worth it right now to do the IRRRL. I would suggest waiting a little bit, right? Because you just don't want to incur additional fees. The only thing that, when you, I'm going to talk about hard cost and soft cost of an IRRRL. A hard cost is lender fees, title fees, government fees. Those are hard costs. Soft costs, to me, are going to be through setting up new taxes and insurance, because you have to re-escrow all your money, right? The reason why I call them soft costs, even though it is a cost to you, is that your current mortgage company is going to refund that money from your escrow account about 30 days after you close on the new mortgage. So yes, you have to set up new escrows. Your mortgage balance is going to go up, but you're still going to save money. You're going to be able to prepay those 2 months or at least a month of interest, and then mortgages are paid in arrears. So you'll be able to pocket about 2 months of mortgage payments. Plus, you're going to get a refund of your escrow money. Now, that money you get to keep. So for some people that are doing, let's say, home improvement projects, or they're working on certain things, it could be an extra boost of money, right? Especially with the holidays right now. Taxes are coming up. Hopefully, all of you are getting refunds, but that's not going to be everybody. Some of you are going to owe money. So just kind of keep that in mind. And the qualification for a interest for an IRRRL is actually pretty easy. It's not like buying a house. Sometimes you even have to submit a blood sample, but don't. When you do an interest rate reduction refinance loan, lender is going to confirm that you have a source of income. That's it. Even if you have a 10% disability rating at $167 or something like that a month, that's enough to qualify you for an interest rate reduction refinance loan. It doesn't make a difference if it's on a primary residence, a second home, or an investment property. It's super straightforward. You're going to need to get a copy of your mortgage note and like a couple mortgage statements and a homeowner's insurance update. So it is extremely easy to do. They typically just take a couple weeks as long as you're within the timeline for that. So those are all just things to consider, right? And IRRRL is a great option. The only other type of refinance the VA offers is what's called a cash out refinance. So for people that are refinancing out of a VA loan or from a conventional loan into a VA loan, that is considered a cash out refi. And then that requires an appraisal, everything else, right? Only the IRRRL doesn't require the appraisal and all the documents. All the other type of refis do. Because for a lot of veterans that don't know that you can actually cash out your property up to 100% of the value, that's your decision. I'm just letting you guys know that definitely is an option, that you can do 100% cash out refi. So some people that might have a 5 or 6% interest rate right now that want to pull equity out of their property, it might be time to do that. So again, if you need the money, but you really need to understand what goes into those. The other cost, just like with a regular VA loan, if you don't have a service-connected disability of at least 10%, you do pay a funding fee, but it's a reduced fee. It's 50 basis points. So instead of paying like 350, so 3.15% for like subsequent use, but you will have that if you do a cash out refinance. Just remember that. And for the veterans that are exempt from paying property taxes, when you do your IRRRL, you also won't have to set up your taxes, but just make sure that you talk with a lender that knows what they're doing with that. We've just seen it too many times where people just don't do that process. Laura, do you have any questions for me with that?
No.
There's a lot of
I do
info.
like that it's a reduction, that you don't have to pay the full thing. And but I really want to, I think when we did, I think it was a IRRRL or a refinance. I can't remember which one it was. But yeah, they charged us a ton in fees, and we should have just left it, because our end goal, we weren't going to stay there for a very long time. So we reset the mortgage, and also like it just didn't make that much sense. I think we only saved maybe like $100, and it cost us $100 a month, but it cost us $5,000, and then we ended up selling.
Right, and that's something important to let's talk about that, because Loris, that's a good point. Is that it's going to depend on how long you're going to be at the property, right? A lot of people refinance twice in 2020 and 21, right? So just kind of think about that. If the rates drop enough and there's enough savings, it's worth doing the refinance, because the people at 2.25% interest rate barely paid any interest, right?
Yep.
When you're in the 8s or 7%, again, the rate's going to be driven based on your credit score and type of property and your just financial situation. So keep that in mind. Don't discourage yourself, but just again, remember 210 days from your first mortgage payment, you must have made at least 6 mortgage payments. And no, you can't make 2 mortgage payments in 1 month and make it count. It's going to have to be 6 actual months. You need a mortgage statement. So just kind of keep that in mind while you're going through that process. Again, we have a question. We have a question here. Yeah, so we have somebody that just commented that they've been at their home for 6 months and want to lower their mortgage payment. And they also have the service connected, so they don't have to pay the property taxes. So yes, Maurice, reach back out to me, the past client, and then we'll be able to help you out with that and get you in a good spot. Because again, it's going to be a lot easier than it was buying a property. So it just makes life a lot easier, especially with the holidays and everything else that's coming up. So we spent a good amount of time just on that. Again, if you guys have questions, drop them. I'm going to share my link here in a second. But the veterans that missed out on that opportunity to be a homeowner and refinance, now we're kind of coming up to what we talked about a little bit earlier when we started the presentation, right? What are the steps if you are like, I want to get into homeownership? And on top of all that, everybody that's out there, the holidays are coming up, and Lourdes, everybody talk. I mean, we talk real estate. I don't even know I talk real estate. I talk real estate. But people with families are going to be talking about buying if people are renting. Parents are going to share. They used to pay 18% interest rates and they still bought a home. So if you guys want more education, hit the like and subscribe button on the channel. Reach out to us with any questions. But now we're going to kind of switch gears up a little bit and talk about what are the steps to being a homeowner and leveraging your VA home loan. And I think this goes hand in hand. Even if you own a home and you want to sell a property, this is for you. Hey, I'm thinking about buying something in a couple years. This is for you. The people that wake up and buy a home, you normally want to plan ahead of time and as far in advance as possible. I had a client call me today 1 year in advance. And I'm like, that's what I'm talking about. Like, that makes sense because you want to prepare on that. So, Lourdes, walk us through what that home buying process looks like. Like, what are the steps, like agents, anything you can think of?
Yeah, I think the biggest thing is being really clear with your budget. I think that's probably like the biggest thing. And I know even when I first moved here, I wasn't service connected at that time, so I had to pay property taxes, and we saw our taxes go from 6,000 to 10,000 within the first couple months, and it's just the budget is huge, huge, huge. And then if you do have to pay property taxes in some states, you don't have the luxury of not. You have to be 100% service connected. And some states don't even do anything. And but you do have to come up with that budget. And then once you come up with that budget, I would definitely talk to a loan officer and a real estate agent just to sit down and tell them your goals. Like if your goal is to get a single family home for your family, but then you're going to be moving in the next couple of years. Like it's really important for you to sit down, because that ultimately is going to say, okay, let's not buy at the top of your budget. How about we go at the bottom, so you can still use your VA home loan over and over and have multiple on one. So it's really important to sit down and come up with a good game plan, and make sure you let your real estate agent know, and also your lender, so they can help you with the action steps that you need to make it happen. So I think that that's probably coming up with that plan, what your goals are, the pros and the cons, with everything. So that is going to be step one. Step two, I know, I know I wanted to buy a multi-unit, and I laughed because it took me 3 years, people, 3 years for me to get my building. And I got a beautiful 4-unit, but people see it, they're like, wow, you're so lucky. I'm like, man, you have no idea how to do to get this
I
property.
remember, Lourdes.
I
I
know,
remember.
I know, because I mean, but yeah, so it is knowing that step. So don't get discouraged. If you need a rent for 1 year to get in a good clear space, for you to take this step, or if you're ready to go right now. I wanted to go right now, but I didn't have the financial means to do it. And every single obstacle, sorry, David, but every single obstacle out there, I gave it to David, and he was able to help me, do it. I was in a W-2. I was 1099. Taxes, they were stuck in la la land because of COVID, and they didn't want to process. I mean, like every possible turn that you can do. I actually went through it myself, so I know what it feels like to not know if this is going to come to fruition. But being as prepared as possible mentally, and then knowing your budget, everything like that. Choosing the right team, someone who can help you and guide you through that process, and be able to really be transparent as possible with you, and see if this is going to be a good fit for you or not. And I say that some people don't want to be landlords, and I'm like, oh, this is the best thing, blah blah blah. I'm like, well, I don't want to. Like, I travel too much. I don't want to do it. Like, I just want a condo that low maintenance. So we have that. And then when you do when you do find that property, you do want to make sure that you have the proper inspections, not just your traditional home inspection. You also want to make sure that if you see trees around certain areas, you want to make sure that you do get a sewer scope. There's like all these different things just to help you with that process. You can have as many inspections as you want within the first 5 business days here in Illinois. And then other areas, they have that too. And I would suggest doing that, because if not, you're going to be blowing budgets, David,
Yes.
blowing some budgets, fixing some things that you
Yep.
might not. And in order for you to like sue a seller, if the seller had, knowledge or what have you, it's just very, very difficult for you to do that on the back end, then to fix the problem. And also, once again, having that right team, choosing the right real estate agent. And I say, I had actually talked to one of my clients. We sold her house. She moved out of state, and she calls me and she needs another property. And she is so like, her agent when she moved out of state, I didn't recommend her, some other agent. But and I told her, I was like, oh, I can give you recommendations. Oh, I'm gonna go with this person, and had an absolute horrible experience. So making sure that you have someone that can screen these people out. And she told me, she was like, I want you to screen these out before I reach out to them. Tell me about them. Is it going to be a good fit or not? So today, she even said, don't give them my phone number. Just let me call them and let me have a conversation. And I tell her, if you don't like this person for whatever reason, it can be whatever reason you want, then let me know and I can find you a different one. I have a ton of agents actually on a national level. But so I was telling her this, but selecting the right agent is imperative. Another friend went to that area, so and used a different real estate agent, of course, and had horrible experience too. So I'm all like, I don't know what's going on in that little area. But I get to not to use. So that's one thing. And then also so I'll jump back into like after the home inspections, we have we are the offers, when we're submitting offers, definitely listen to your realtor on that, and they should, a good one will show you the comparables, give you recommendations on on what's going on. Of course, the agents want to get you the best deal most want to get you the best deal as possible. So if we're going, $50,000-$60,000 below ask type of thing, and there is multiple offers and there's not a lot of inventory, it's not going to happen. So definitely listen to the professionals. Make sure that your I guess I can ask you this question, David. What do you do when an agent CCs you on an offer? What is it that you can actually help in the process that you do?
Yeah, so I'll go over that, and I want to kind of talk about the right team, like you were talking about. So it's all about strategy, and just like in life and relationships, it's about communication, right? So we find a lot of success in the agent loan officer relationship. So let's say, for example, when Lourdes has a client that's a veteran and they're pre-approved, like a real pre-approval, not a verbal one, and you make an offer on a property, like Lourdes will CC me on an email, so then I can reach out to the listing agent and let them know, hey, this client, without divulging financial information, right? Not your credit scores or anything, but you walk them through. This is what's going on with the client. They're pre-approved. All the documents have been verified. We have their certificate of eligibility. Lourdes, how many clients have you had that have been pre-approved and a week before closing, the loans die? I'm not even going to go into it. That's like a whole separate show that we can put on. I just got that call the other day from an agent. I'm like, they should have never been pre-approved. I don't know what happened. But even eligibility requirements, which we have a ton of videos on, definitely just check that out. Like, just to be on the safe side, especially if you got discharge on that. But the loan officer calls them. They walk them through it about 10 to 30 minutes after the offer is accepted, just to make sure and go through it. And you really want someone that's available 7 days a week, right, Lourdes? When does you're looking at homes and making offers on the weekends and in the evenings, not during work hours? That's not going to happen, right? But with a lot of these call centers, that's what the experience you're going to get. And just because you're getting good service doesn't mean you're paying extra money, because trust me, a lot of veterans pay a lot of extra money for no reason to get bad service from the big mortgage companies that solicit to you on a daily basis. So kind of keep that in mind. And Lourdes, to your point with the team, I'm on the same boat, right? We work with people across the country, just like you work with referrals across the country. And it's definitely a mix of people. You never want to be sold, but you also have to understand the realities of a market, right? If you're in the market to buy in spring, it's hands down the worst time to buy, because guess what? Everybody is buying. So you're going to have all your contingencies waived. You're not going to get a home inspection. You're going to move in. You're going to have to change pot. It's going to be a disaster. what, or at least it can be, because in certain markets, people waive all those contingencies, and then what do you do at that point when you already own a home, and then realize that you need $50,000 worth of work? And let me tell you, $50,000 doesn't get you far. Uh,
Right.
you could have a plumbing issue or electrical issue, and all of a sudden you're out 10 grand just on each of those, or HVAC issue. So that's why right now is the time, January or November, December, January, February. A lot of the homes I've seen, I don't know about you, Lourdes, a lot of the homes I've seen have been vacant. Right? Well, why is it mostly like estate sales right now, or like people have moved out, divorce situations? What do you know what it is? Primarily?
Deals falling through.
Oh
um,
yeah.
Whether it is, I haven't seen this many deals fall through, but I'm seeing a lot of deals fall through right now. So they are making already that transition out, and something happens, and now the house is vacant.
Dang. And then it puts a seller in a bind. So this, I guess, is
Yeah.
used for sellers, right? So I'm always a fan of, if you're buying a house, you also have to know how to sell a house too, because there's things that go with it. And deals can fall apart all the way up until closing,
Yeah.
for whatever reason. Either clients are not qualified to purchase a property, they don't have the eligibility to use their VA home loan. Trust me, we've seen crazy things. We just have seen just deals fall apart for a multitude of reasons, all the way up until closing day, right? So again, those are all things that you just kind of need to keep it in mind. But a lot of times too, I know, Lourdes, you talked about like CCing a lender on an email. A lot of times when veterans hurt themselves by going with the big veteran, they're not friendly banks, people. The big veteran focused solicitors, they, a lot of times agents won't accept those offers. I don't know. Have you seen that before? I mean, I teach across the country and I hear that a lot. They're like, oh, if I see this pre approval, I'm not taking it because they didn't really pre approve them. Have you seen that happen?
Yeah, and I think we'll touch. Well, actually, I can touch this now, because we were going to discuss at a different time. But yeah, it's just the education that is going along with that. So if they say, hey, I see this lender. I see this lender right now, and he's horrible. Have you worked with this personal lender? And usually the agent will say yay or nay, or I've worked with this company, not this specific lender. So that's a very, very important thing to note, that some of these bigger banks, they might do good, they might not do good. There's a lot of phony pre-approvals going out, and one thing that we do is just ask a lot of questions to our clients. And sometimes if something doesn't seem right, then David gets a call. I'm all
Yeah,
like, hey, wait a minute, this doesn't seem right to me. And I try to stop it as quickly, not stop it, but try to honor the closing, the closing time, or the closing on the contract, when we start to see something is not where it needs to be.
right.
So we've been down that road so many times, where I know it can happen. We had an active duty, or a National Guardsman, and the other lenders said that there's nothing that they can do about it. And in reality, there was. He served a few stateside deployments, which qualified him for the VA loan, and the others just didn't know that they had to go through a couple steps to do it.
I
So
remember that, Lourdes. Sorry to cut you off. Yeah, I remember that because I was deployed at that time. And from halfway around the world by the Arctic, I was like, oh, yeah, we can figure it out. We figured it out with the VA. That was crazy.
yes, but not a lot of people are willing to, get on the phone with the VA or figure it out. They just say no, and there's a denial. But thankfully, with that one, we caught it in time. Actually, we caught it, I think, a week or two in, so we had no change in close date, because David came and saved the day. But knowing that, and knowing how to actually say, because another thing that anytime if I have that reservation, actually, now that I'm thinking about it, I have had like, hey, I don't want to use this bank because I had a horrible experience. I say, well, I have a David, or I'm
Mhm.
sorry, I have someone who can close on VA home loans. So if there's any type of issues, I stop it right away. I'm very proactive, and I step in right away. Now, not saying like I think maybe I'm trying to think if we had one that just couldn't do, but I can't think of it. So probably not, or probably it's been a
No.
long time. But
Okay.
if it can be saved, it can. But if I know that some of my clients, if I know that they may, how can I put it? It's going to be kind of a harder deal, then I'll run them through David anyways, like just to make sure that we're going to be good, or right now is a good time um, to buy.
Yeah, and that's the thing. Like, it's everyone's time frame is different. Some people want to buy now, and they won't find a place for like 2 years. Then there'll be people like me, where I wake up on a Saturday and I buy a house on Sunday, right? Where I'm like, oh, I wasn't, we were thinking maybe, maybe not, but then just a right property came up and we snapped at it, right? But also kind of goes back to what you were talking about, Lourdes, is like, if you're going in making offers 40, 50,000 under the list price, and there's multiple offers, you're wasting your time,
Yeah.
right? You got to go in with the right mindset. I was talking with a client recently. They were asking how much. They're like, I'm willing. My budget allows me to go 100,000 over asking price. Right? He's like, I have the money. I think the comps are going to be there. I'm going to be here for the long haul. I'm planning on not moving ever. Like, everyone's situation's going to be different, right?
Mhm.
And like you mentioned earlier, it's all about how much you budget for. If you can afford it and you're going to be there for a while, it can make sense to buy, especially if you're trying to be if you have kids, certain school districts. Otherwise, you're moving around all the time. Rent is always going up. At least your mortgage is locked in. Yes, property taxes can go up. Maybe one day they'll go down. We'll see. But just don't forget, if you get your disability rating, know how it works. Because recently, I mean, I kind of want to kind of go away from what we talked about, but it's also somewhat relevant. I'm going to give an example of Cook County in Illinois and Lake County in Illinois for your VA disability rating, right? And this is why it's so important to know the details of how counties and states work if you have a VA disability rating and you want to apply it, right? And it goes across the country. Check with the county assessor's office. So I'm going to use a quick example. In Illinois, if you have a 70% or higher disability rating, you don't pay property taxes up to a 250,000 equalized assessed value. So it's not your purchase price, right? You buy a price for $1 million. It's not going to be, it's $1 million assessment, right? They have a different formula for that. So you could buy a $600,000 home, and your estimated EAV will be 190,000, let's say, okay? And depending on where you live, Cook County or Lake County, it's going to be different calculation on that. But what I learned the other day was that in Cook County, let's say your property is assessed at 300,000. Well, the Cook County is going to give you a $250,000 credit for your tax exemption, and you get only taxed for 50,000. But in Lake County, if if your home value is over the 250, the EAV, then you don't get the property tax exemption at all. They don't give you like an adjustment on that. So those are all things to consider when you're going into that home ownership piece. Also, when you own a home and your value goes up and you don't check your property tax bill because you're like, oh, I'm exempt from it, I just throw it away. But if they change your assessment value to a point that you don't qualify for that anymore, that can have a significant impact. Taxes vary widely. Like let's say in Lake County and like where in Illinois, taxes are insane. $300,000 home taxes are $10,000. In Chicago, what is like a $600,000 home taxes on average for a single family home?
600. Well, it depends on where you're at, but 600,000, you're looking closer anywhere between 5 to 10, depends on where you're at
5 to 10.
the.
Yeah, so
Mhm.
still high, right? But if you go to like North Carolina, taxes are like $1,200 a year. I like that, but you also have less amenities. You don't have as much as you do in the city for that, which kind of leads us to like, if you haven't bought a home before, you're going to have closing costs, right? They're on average, it's about 3%. If you work with the big banks, it's 6% because they charge you an additional 2 to 3% in junk fees. So keep that in mind. Um, and Lourdes, I know for the active duty folks, so just kind of give an update to everybody as well. Over this next year, we're going to change up the format a little bit of how we do our presentations. We're going to segment months with correlated. I'm going to give an example. In January, we're doing like credit and budgeting awareness. So the whole month, we're going to do live events talking about credit, budgeting, what does it look like for future home ownership. And February, we're doing one on PCSing, right? So as active duty veterans are getting ready to change duty stations or coming back stateside, going overseas, we're going to give tips all around that. We're going to do a whole segment on home improvements. I am a victim of buying a place, and the amount of work that is needed is mind blowing.
Is that how you lost all your hair, David?
This I lost it all in a couple days. I know. I even lost this. I think I got a lot more gray hair during this process. And what's still mind blowing to me, Lourdes, is we do this every day. We help hundreds of clients a year, and yeah, going through it yourself, you just like the mind blown. Yeah. So, but again, a lot of it is preparing, but then the stresses of buying a home definitely exist out there. So I definitely understand why people wait. But we're going to go over all those things kind of throughout the next couple of months, just to kind of be able to showcase all the things that go into home ownership, not just talking about the VA home loan and real estate, because it's endless videos we could talk about, but we also want to just add value to all the folks and people that subscribe to the channel, just to be able to get, because there just is a lot, right? With that. Now, Lourdes, when people think about buying, or they also have to think about moving, do you have any tips for, and then, I had to move like 4 times to make this happen. But anyways, what tips do you have for folks that are planning? Maybe even just talk about, and I could talk about some of the costs associated with just even doing a local move. You have much experience with that?
Yeah, definitely. Definitely. So moving, I'll jump this. If you currently have and you're thinking about selling your property, moving into a smaller, bigger property, you know, it there has been a lot of deals falling through lately. So it's kind of crazy when the unknown is like really the unknown. So just making sure that you have a good plan set in place. And then movers are super expensive. So and it's just crazy. So what we're seeing is a lot more homes, like, having garage sales, moving little to not much, throwing the garbage cans are stacked, with stuff that they can't. So one of the suggestions is definitely, it goes back to what we first started, is just knowing how long you're gonna be in this property, how long, what's your next steps. And also, I remember we went from a 7-bedroom house to a 3-bedroom house with like a little office. So we had so much furniture. We're like, what are we going to do with all this stuff? Like, we had beds that we were leaving there and stuff. So it's very important to really think it through. And if you're going to downsize, upsize, start a family, can't say terminate a family, but if that
no, just say, but if you're going through a divorce situation,
divorce situation, how do I say that nicely?
Thank you, Lourdes. Terminating families. Thank you.
Yeah, like if you go through divorce and stuff like that, but not terminating, because I can't say that. That's horrible. It's It's very bad. But yeah, so are there going to be any life changes that may happen and doing that for military families? You are aware that you do have to PCS you do have to PCS. So if you have a house, definitely take care of the house and just make sure that it's appealing. Any type of fixes that you have to make in between, make sure that those are done. And then also going back to getting that team set in place. Like, are you going to sell and are you going to buy another property? Are you going to do this? What is your next steps? What are you trying to do? We
Yeah,
have a
it's kind of
client.
yeah.
Oh, sorry. But we
Okay.
have a client that had purchased in a duty station in Texas, and now he's going to purchase here with his intent to wherever he gets stationed somewhere else, go buy another property there, and he can, and it's all under the same VA home loan. That's why he's sticking with a certain amount. We're like, you can go up to this amount, but this is your plan, so let's stay within this budget. And knowing what that looks like on the other end, I think is going to be perfect. You can always put your VA home loan into a conventional loan if you need to free up your entitlement. Say you're moving from Chicago to California and you can't have all these things. So just knowing what that looks like is probably the best.
Yeah. And there's definitely some options with that. And just kind of go back to like that moving cost. And when you upgrade, downgrade, or if you go from a condo to a single family home, I didn't realize how many tools you need. I did not realize how many tools I needed to buy. So I had my Polish experts come out, and I did not like how much everything was. So, but yeah, so just kind of keep that in mind. Movers, same thing. Like, yeah, I mean, I think they charge like $220 an hour, right? The $220 an hour plus a truck fee plus a move fee. So those things are gonna add up, right? This is why you want to budget for it. That's why it's so important to understand how much money you have. My wife was like, let's hire a movie company. I got an estimate. I almost passed out. I was like, there's no way. So I did it at a quarter of the price, but it took time, right? Like I had to coordinate movers for packing things. I rented the truck. I did the driving. Then I hired guys to unpack. Then I hired guys to pack. Load the truck up and then unpack. So those are things you have to consider. And like you said, Lourdes, it's like when you go into a bigger home, it's just kind of it gets crazy. So if you guys don't know, as a side note, this is a completely sidebar, is that for the active duty and veterans that are out there, the PX has partnered with Home Depot. So now you don't have to pay taxes on appliances and they do free delivery.
Wow.
Just kind of FYI. Because that saves you a ton of money, especially if you're making big purchases, you're doing upgrades. We're going to talk about a lot of that when we talk about our home improvement segment. So then we're going to talk about like all the different things that you can do with like what are your options so you can save as much money. I'll show you how to get a kitchen for a fifth of the price. So we're going to kind of go through all of that stuff. So you guys get a good idea of that. And at the end of the day, too, just buying a home gets you some good equity for that. Yeah, one of the comments we have here is you need a lot of tools. Yeah, that is 100% correct. There's just a lot of stuff, but you can shop, you can get secondhand stuff. You just kind of have to be careful with that, just because tools do break down over time. So definitely worth the investment, or just wait and ask for a Christmas present from Santa to give you a power drill set from Milwaukee.
Yep.
So now I get it. Lourdes, any closing thoughts? I want to just thank everybody that came out. I'll give Lourdes the final close, but just want to thank everyone that joined us today, and thank you for your support. Please share information. If you guys are out there during the holidays and people have questions, please send us our way. Like I said, we can help them in all 50 states. Even if you're overseas, we'll help them. But Lourdes, close us out for the evening.
I'm just seeing if there was anything that we did not touch on. I did think, did we talk about the cash out refinancing versus the IRRRL? Because I
Yes.
think that, okay. All right. That was the only thing that I wanted to bring it back to. But if we are good to go, then not sure if we have any additional questions, but
no, we're good. Well, thanks everybody for joining us. We'll talk to everybody soon.